Dear viewers, welcome back to my channel. In this video, we'll be learning regarding the computation of the taxable capital gain. Kindly watch the video till the end, like it, share among your friends and subscribe the channel. If you have already subscribed the channel, kindly ignore the message. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. This is a problem on computation of taxable capital gains. So the problem is like this here. Sri Chandrakant, let me drag this here. So let me drag this here. Sri Chandrakant purchased a residential house in 1999 for rupees 6,10,000 and spent rupees 1,50,000 for its improvement. Its fair market value as on 1/4/2001 was rupees 8,65,000. He constructed an additional room at a cost of rupees 6,45,000 in the financial year 2007-8. During the previous year, he negotiated with Mr. Raghu for sale of the said asset for rupees 20 lakhs and received advance of rupees 25,000. However, Raghu failed to pay remaining amount on due date. Hence, the advance money was forfeited and retained by him. Subsequently, the above property was sold for rupees 44 lakhs to Mr. Harsha in August 2019. For this, he incurred an expenditure of rupees 10,000. He purchased a residential property on 15/3/2020 for rupees 8,15,000 and deposited and deposited rupees 2,50,000 and deposited rupees 2,50,000 in CGAS in a specified bank. The cost inflation index for the financial years 2001 to 2007, 8 and 2019, 20 were 100, 129 and 289. Compute the taxable capital gain for the assessment year 2020-21. So now let us solve this problem. So first let's understand the problem what is given. So Chandrakant purchased a residential house in 1999 for rupees 6,10,000 and spent rupees 1,50,000 for its improvement. So here the asset was purchased prior to 1/4/2001. So we need to compare the cost of acquisition with the fair market value, whichever is beneficial to the assessee, that we should consider. So here the fair market value in this problem is given as rupees 8,65,000. So which is beneficial to the assessee, that we should adopt for the purpose of index cost of acquisition. Whereas rupees 1,50,000 which is spent in 1999, this is the cost of improvement prior to 1/4/2001. So any cost of the improvement made to the asset prior to the 1/4/2001 should be ignored. He constructed an additional room at a cost of 6,45,000 in the financial 2007-8. So we need to find out the indexed cost of improvement here. During the previous year, he negotiated with Mr. Raghu for sale of the said asset for rupees 20 lakhs and received an advance money of rupees 25,000. However, Raghu failed to pay the remaining amount on the due date. So as he failed to pay the remaining amount which is due, so it gets forfeited here, and the same should be deducted from the fair market value. Then he sold the above property was for rupees 44 lakhs to Mr. Harsha in August 2019. For this he incurred rupees, it is not 1,000, it should be 10,000 here. So 10,000 he purchased. This 10,000 is nothing but the expense related to the sale. This should be deducted from the selling price. He purchased a residential house property on 15/3/2020 for rupees 8,15,000 and deposited rupees 2,50,000 in CGAS in a specified bank. So here there is a sale of house and the proceeds are utilized for purchase of another residential house. So the assessee is eligible to claim exemption under section 54. So we are given the cost of inflation etc. here. So now let us go for working out here. So computation of taxable capital gain, name of assessee Mr. Chandrakant, then previous year 2019-20 and the assessment year 2021. So let me insert the two columns here. Let me take three columns. So here it is particulars. So this is inner column, so rupees. So now sale proceeds of residential house, which is given as rupees 44 lakhs. Less expenses. So we should deduct if the expenses are connected with the sale only. So less expenses. So expenses amounted to rupees 10,000 here. So 10,000. The difference is called as net consideration. That comes to rupees 43,90,000. 43,90,000. So now from this we should deduct less indexed cost of acquisition. So here the cost of acquisition is given as 8,65,000, which is beneficial to the C we should take. Then we should deduct the forfeited amount. That's equals to rupees 8,40,000. That's equal to 8,40,000. So now this we need to find out. So 8,40,000 multiplied by 289 divided by, let me underline this, 289, let me underline here. So that comes to 289 divided by the cost inflation index here, it is 100 only. So that comes to here 24,27,600. Then the next one here, we need to find out the index cost of improvement. So indexed cost, this also we should deduct here. So let me write here. So less indexed cost of improvement. So here that comes to, so the cost of improvement incurred here is rupees 6,45,000 multiplied by 289. So this, let me underline here. So now we need to find out what is the cost inflation index for the year 2000. The improvement is 78. So 78 we are given as 129. So it is 129. That we are going to get as so 129. So we are going to arrive as 14,45,000. Then the sum of these two together will be the sum of this will be 38,72,600. So we are going to arrive at capital gain before exemption. That comes to rupees 5,17,400. So now from this we should go for deducting exemption. So the assessee is eligible to claim exemption section 54. So less exemption under section 54. So the cost of new house, which is given in the problem as rupees 8,15,000. 8,15,000. then the amount deposited, so amount deposited in a CG capital gain account scheme, CGAS, which is given as rupees 2,50,000. So 2,50,000. So the total here it will be now. So the total invested, that comes to rupees 10,65,000. So now we should compare this rupees 10,65,000 or capital gain of rupees 5,17,400, whichever is less. So here that comes to rupees 5,17,400. So therefore taxable capital gain will be nil here. So no amount of is taxable here. So here the assessee is eligible to claim exemption under section 54 only. So that this is the answer here. Though he has purchased a new house costing rupees 8,15,000 and he has deposited rupees 2,50,000, but he is eligible to claim only to the extent of the availability of the capital gain here. So this is the CG before exemptions which we have got here. So only this much is he can claim as the exemption here. So let me make this bold here so that it will be distinct to you, to the viewers here. Thank you. It is a problem on computation of taxable capital gain. So the problem is like this. Mr. X had, let me drag this here, Mr. X had purchased a non-residential building in April 2006 for rupees 4,88,000 and spent rupees 51,600 in May 2007 for additions to building. He sold the same on 3/10/2019 for rupees 15 lakhs. He deposited rupees 10 lakhs in a specified bank under notified scheme for buying a residential house. He is not owning any residential property. The CII, that is cost inflation index, for financial years 2006-7, 2007-8, 7-8 and 2019-20 were 122, 129 and 289 respectively. Compute the capital gain for the assessment year 2021. So now let us work out this problem here. So first let's understand what is given. So Mr. X had a non-residential building in April 2006 for rupees 4,88,000 and spent rupees 51,600 in May 2007 for additions to building. So here we have to find out the indexed cost of acquisition and indexed cost of improvement. He sold the same on 3/10/2019 for rupees 15 lakhs. He deposited rupees 10 lakhs in a specified bank under notified scheme for buying a residential house. So here there is a sale of non-residential building but used for purchase of a residential building. So the assessee can claim exemption under section 54F. He is not owning any residential property. So now let us work out here. So computation of taxable capital gain. So name of assessee Mr. X, previous year 2019-20, assessment year 2021. So let me insert 3 columns here. So particulars, here also rupees here. So the sale of non-residential building, so let me take here. So sale of non-residential building here, so which is given in the problem as rupees 15 lakhs. 15 lakhs, then less expenses connected with sale if any. So in this problem there are no expenses, so the difference here itself, so nothing is there, so just let's put dash here. So it is the difference here is a net consideration, so which is 15 lakhs. Then from this we should deduct less ICA, that is indexed cost of acquisition. So here the cost of acquisition is given as 4,88,000 multiplied by the price index for the year 2019-20 divided by, so let me underline here this one. So here the cost inflation index for the 2006-07 it is 122. So it is 122. So that comes to rupees 11,56,000 here. 11,56,000. Then the next here we should also deduct less indexed cost of improvement. So I'll write in short ICI. So the indexed cost of improvement, the cost of improvement is given as rupees 51,600 multiplied by 289. So this will underline here. So the cost inflation index for 2007 it is given as 129. So 129. So it comes to rupees 1,15,600 So 1,15,600. So when you take up the sum of this here, so we are going to arrive at the sum of this, that comes to rupees 12,71,600. So the difference here is capital gain before exemption, that comes to rupees 2,28,400. So now less exemption. So less exemption under section 54F it is. So here if there is a formula, because here it is a proportionate exemption will be given here. So the formula here is amount of investment multiplied by capital gain whole divided by net consideration whole divided by the net consideration So now from the above it is, we can take here the amount of investment which has made here is rupees 10 lakhs. So rupees 10 lakhs multiplied by the capital gain available here, it is rupees 2,28,400 divided by, so the capital gain available, the net consideration here it is rupees 15 lakhs. So rupees 15 lakhs, that we are going to arrive at rupees 1,52,267. So we should deduct this 1,52,267. So the difference here is a taxable long-term capital gain will be rupees 76,133 here. So let me make this board here. So this is an example for section 54F. So here the amount, only thing we should note this formula under section 54F, that is amount of investment multiplied by the capital gain divided by the net consideration. So because the exemption is available to the extent of the proportionate to the amount of the capital gain here. Thank you.